insurance valuation management for commercial and strata buildings. Now, underneath the strata legislation, there's a requirement to insure the body corporate in the common property asset. So we'll have a look at some of the requirements under the legislation and what goes into insurance valuation, and we'll look at a bit of a case study a little bit later on as well. Okay, so what is an insurance valuation? So it's the replacement value that involves the construction of the building having the same functional use or the same usable area as it was originally built. So basically, it's design. An insurance valuation is like a replacement valuation. So if something happens to the building, then there's enough money to put aside to look after that building, to remove all the debris and bring that back to its original state. We'll have a look at one of the insurance valuation reports in one of the other issues. So some of the items that we need to look in here for the insurance policy. So the insurance policy must cover for damage and costs association with the restatement of the building. So that's a removal of debris, professional fees, council fees. So there's about 5 or 6 items that need to be done in there, so we need to keep an eye on that. Also, the body corporate must take out public risk insurance over the common property for its assets to reduce its risk to the body corporate. Now this can also be affected by asbestos and that in the workplace. So if there's been some buildings where there's been asbestos roof and their insurance cover was denied, and some buildings haven't got insurance cover because of the asbestos roof, and that to replace a whole roof to get their insurance. Okay. So as part of the public risk, there's been some incidents where people have been falling over and that on site, so that's getting higher and higher in the litigation and what's happening in Australia. Slips, trips and falls on pathways is one of the highest items that have been going on in the legal entities in Australia. Alright, so we're going to have a look at an event that happened a little while ago. So this complex was 2 units. There was fire in one unit, which is actually spread to another unit, so you can see the intensity of the fire in this building from here. There was a pet shop next door, and actually some of the fire penetrated into the building next door. So as you can see, it was just a total write-off event. Now we tracked this from the beginning to the end of the project. Now, so this has been after the event. Now this sat here for over 4 months, exactly at this site. So they just had their temporary fence up, and that just sat there for that amount of time. Now, for the removal of debris, you can see in the next slide here where the damage a little bit to the building and that next door, and this side here there's a fair bit on this side as well. So this sat still for another 12 months after that, and then finally another 6 months, and that after that they finally started construction, and then this is the final part of the building. So the total loss of rent, which is one of the components of your insurance policy, was $320,000. So we need to make sure that there's enough money put aside for loss of rent. So for the carpet companies, if they've got another place to rent to, if it was owned by them or whoever the tenant was, that's going to be lost income for that business. So if you've got any questions about the sinking funds, insurance valuations, occupational health and safety, you can either contact Sydney or myself, and we'll be happy to help you. We'll be looking at one of the other insurance valuations in the next series.